Hey guys, so in this video it's going to be a bit more of a backtesting video. What I'm going to do is I'm just going to go back to pretty much a random date and then sort of move price forward, and we're going to try see if we can implement some of the entries which have been previously taught into the price action. So I'll just choose a random date and then we'll drop down to the 30-minute time frame and sort of mark the zones out as we go, trade the correct sessions as well, because obviously it's important that we're implementing this at times which we're going to be looking to trade. Now, just to recap on the session, so what we want to be looking for in particular on gold is trading sometimes the London session through certain market cycles throughout the year. London session does provide quite a lot of volume, so you can, if the setup is correct, you can definitely look for certain entries. You do want it to be obviously high confirmation. I wouldn't be really looking for impulse entries as such, but more so type B, C's, and D's. And then in the afternoon, you have the US market open, which obviously provides quite a lot of volume to gold because the US dollar connection. So what I'll do is I'll choose a date. We can just go back randomly. I think, let me just select, so we'll go to replay mode. So I think even if we go back to around February time, that'll be a good time. And what we'll do again, so I'll drop down to a 30-minute time frame. What we can do is we can play price forward, and I'll mark out the zones when the correct sessions start opening, when we would be looking at the charts, and then I'll take the entries which I believe would probably play out quite nicely, and obviously provide some reasoning for it as well. And I think this would be a good way also to visualize then the different types of entries so that you can potentially implement them in your trading plan moving forward. So let's move price forward. You can see at the moment, so this is 1:30 in the morning. So coming up to Asian session, not a time where we would be looking to trade, so not even any reason to mark anything out at the moment. I would normally start marking out at around 8:39, so we can see price is just, let's just move it forward a little bit more. Okay, so we had around 9 o'clock here. You can see we have, this is probably our most important resistance level, and then we have a support level over here. And the reason why we're marking these out again is because we look at our most relevant and important support and resistance zones. Now this one's an important support because if we were to look left, there's clean candles to left. And then obviously this resistance, the last time price was in this area was quite a while ago, but if we break above it, you can see we have some clean candles to the left to potentially trade into as well. So if price were to break above that level, we have potential to look for some buys. But like I said, it is the morning session, so not always going to be hoping for the most volume. Now, again, it's not going to be a good idea to take a buy at the break of this high, although we did break that resistance level, and the reason for that is because this resistance is very close. So we wouldn't be looking for any buys just yet, but we do know that we're breaking resistance levels. So I'll play price forward a bit more. Okay, so we pushed up and closed above this level. Again, the problem that we have now is we can either potentially look for a wick fill buy here, but we do obviously have a bit of a session issue. We have some rejection wicks to the left here, so I'll just be wary. Potentially wouldn't even look at taking this trade just because it is obviously in the morning. I'm not such a fan of taking gold trades in the morning, but there's always, because of these big moves in the morning, there's always potential we can catch something later on. Okay, so we're playing price forward. Doesn't look like anything is really happening at the moment. We'll move price forward a bit more. You can see this is sort of in between sessions, so we're not really going to be looking to take anything in between sessions. When our price sort of starts playing out the way we want it to play at the time we want it to play out, then we'll start looking for some potential entries. Okay, so we had potentially a news move over here. This was pretty much our New York session. We had this news move, price pushed all the way up so we can adjust our resistance zone. We still have our support zone. Now we've made this massive push. Let's see, potentially if we form a resistance, because this move was so big, we can always see the potential of resistance form up here, and then maybe a correction of some of this move. Now it is going to be counter trend and most likely a counter trend type C, but we just have to wait for a solid resistance level to form. And potentially even down to the 15-minute, we have maybe 2 15-minute resistance candles to sort of confirm that resistance. So let's just play that forward. Let's see what we can get here. Okay, so we have a resistance candle forming, and if we drop down to the 15-minute time frame, you can see we have 2 resistance candles. So it is some sort of confirmation of resistance, which is fantastic. Now we go back to a 30-minute time frame. What I would do in this situation here is, okay, how are we going to enter this trade? Now, we have a few ways of entering it. The one is going to be as a wick fill candle. So once the candle wicks up and then flips, we can take an entry at this point over here for it to continue down. I think that's going to be a bit risky based on the amount of buyer's pressure which we have moving up. So what I would rather do is take an entry at the break of this candle low, because then what we're doing is maintaining, or we are going to be continuing bearish candle structure. So bearish candle structure, we only have one half of it at the moment, and that's when a candle respects the previous high of the previous candle, but we haven't broken any lows of any candles. So we only have one half. So we'll complete bearish candle structure once we break the low of that 30-minute candle. So what I'm going to do is I will place a short position, which would be at the break of this candle. Our stop loss is going to be at wherever the high of the upcoming candle creates. So it could be above this candle, it could be halfway through. So what we'll do is we'll just place it here for now, because we don't know how high it's going to be. That obviously, unfortunately, I can't do on TradingView, but we would be able to see that in person. And then the TP in this scenario, I would say, is probably going to be at around this resistance level, because what we're expecting is for price, because we pushed so much and we haven't had any sort of a pullback, potentially price is going to retest this area and then could move up, or it could even come down to the support area over here. So those are our two options. Now what I'll do is I'll play price on, and again, the stop loss, just keep this in mind, is a bit of a floating stop loss at the moment. We actually don't know where the stop loss is going to be, so this is variable. So once the candle wicks up and then flips, that'll provide us with the stop loss. So I'll just put it here for now, because we don't know how high it's going to be, and then we will continue price on and see where we move. Okay, so that you can see a pretty flawless move. We had a stop loss. This provided us with a 27 pip stop loss. We would have had our entry at the break of this previous 30-minute candle low over here. You can see that, and our TP would have been hit at this point over here. You can see price did continue quite a lot. I personally wouldn't have been too comfortable with holding it all the way down to these areas, just based on the fact that we had such bullish pressure coming up. But all in all, a 70 pip trade, anyone is going to take on any day of the week. So all in all, that's a great trade, and you can mark that down as a sort of a successful type C. The fact that there's probably resistance to the left, which is why we formed this resistance over here, is probably the fact why we're rejecting that area and pulling back. And then there's always potential for price to continue bullish. But for now, obviously that's our trade taken. After taking such a big trade, you can pretty much call it for the day. And what we can do is we can actually clear the chart and then move on to the next day. So I will speed price on, and then we can go into the next session. Okay, so we are at the London session at the moment. So what I would do is I would mark our resistance area out, so we don't have to mark it all the way. We don't have to mark it all the way to the top of the wick, because that's just a visual representation of the zone. We know that price, this whole zone is up till this wick, but to keep the zones neat and tidy, we can do it halfway through. It's fine, because we know we're just marking out those resistances, and if we break those areas, we have some clean candles to the left. In terms of sell zones, you can see there's not really many clean candles coming down. So I would say our most relevant sell zone is probably going to be below this support. And the reason for that, obviously, is because we have this clean range to the left, and this support is the previous support below that level. So price could potentially retest that support level. So what I'm going to do is I'm going to play price on. I don't think, based on how we are sitting up here, that there's going to be too much potential. Okay, so we've closed above resistance, and we have, this is our London open candle, and we have potential to fill this wick and continue up a little bit. Again, because we're in the morning, I'm a bit skeptical on the volume, and what we could say is that let's just see how big this wick is. We have an 8 pip wick. So what we could say is that if price were to wick down and retest this zone and then flip bullish, we could take an entry when it flips to fill this wick and continue and fill some of this range. So that's what we'll do, is we will place a long position over here. We don't know how far price is going to move, so we'll just put our TP somewhere up there. we'll obviously potentially secure some of our positions. And our stop loss, once again, guys, we don't know where it's going to be at the moment. So let's just place it for now at the low of this candle, but we would be placing it on our entry candle low. So what we would need for this as well, by the way, to take any sort of an entry is we would need the candle to look something like this, to wick down and then to move up, and we would take it on the flip because we can't take it if there's no wick. So I'll play price on. Okay, so we're actually going to call this an invalid trade because we wouldn't have taken that entry based on the fact that there's no wick to the downside over here, and we don't take trades that don't have bottom or top wicks if we're taking buys or sells, because there's always a possibility that that trade can come and create that wick. So we will mark this down as an invalid trade and we would not have entered that, and I'll play price on. So it's likely we wouldn't take a trade in the morning session and we would move price on and see if we can take one in the afternoon. And you can see a good idea why we stuck to the wick rule. Price came back down, but potentially you're going to even continue back into this range, but we're going to have to just wait and see. This is coming up to, this is in between sessions at the moment, so no need to sort of look for any entries right now. Now we're sort of starting to approach what could be our volume coming in for the afternoon, so we'll just play price on a little bit. Okay, we're getting a rejection candle. And now we've got a very strong bullish candle to the top side. You can see we have broken above what would have been our resistance zone, because, and the reason this would have been our resistance zone, again, is because if this is our resistance and we look to the left, let's just draw another arrow here. We look to the left, you can see we have all that clean range to trade into. So that gives us the potential now, again, to take some buys if we get a wick down. So we can see potentially just any form of a wick down. I think because we've had so many retests of this zone on the lower time frames, if we get a wick, any sort of a wick down and then a flip, we can take a wick fill type B here. Now the reason I'm looking again for a wick fill type B is because this wick is 12 pips. Now that's 12 extra pips. So if we were going to take a standard type B, we would be taking it at the break of this 30-minute candle high. We can't be doing that because then it would add 15 pips, number one, to our stop loss and remove 15 pips from what our potential take profit could be. So what my position is going to look like, again, it would be a buy. And what we would do is we would place our stop loss, let's just say, again, at the low of the entry candle. So again, we don't know where that's going to be right now, but our TP is going to be at the high here. And let's just say our position is somewhat going to look like this. I'll adjust the stop loss accordingly, but we would take it once this candle wicks down, flips, and continues bullish. So let's play price on. Perfect. So you can see we wick down, provided us with a 13 pip stop loss, very, very mild stop loss for gold. And we have a TP of around 50 pips. At the moment, price has moved a total of 26. So you can even start trailing your stop loss so that you're not going to be putting any extra risk on the table. And let's just play price on a little bit. And you can see we would have hit our TP and price continued an extra, it did a total of 130 pips from our entry. Personally, I think we would have been out a bit earlier just because we would have been securing partials on our position to make sure that we're not letting any profits go without securing. So that's our second win in 2 sessions. Well, in 2 successive New York sessions. 2 pretty straightforward entries. We had this counter trend type C and this wick fill type B. So that's, we can mark those down. And again, we've taken our win for the day, 2 very big wins as well. So what I would suggest at this point is calling it a day, coming back the next session so we can start looking at some more potential entries. We've already taken 2 successful wins into 2 successive sessions. So now we will continue on to the next session. Just keep checking the time so that I'm not skipping too far into the sessions. We are now at 6:30. So this is sort of our morning session. So I wouldn't start marking out my zones just yet, but I think now is a good time to start marking out some zones. So you can see in terms of where price is sitting now, we have had a lot of volume. So what I could do here is mark out some support, and over here I could mark out some resistance. I wouldn't personally be looking too much into this resistance because of all the rejection wicks. You can see we have one here, here, and here, and all these rejection wicks to the top side. So the buys are very risky, but we just have it as a visual representation of prices rejecting that area. in terms of the sells, we could look at some potential sells below the support into these clean candles over here, but the even better sells are probably going to come below this support level because we have some more clean candles to left. So what we'll do is we'll play price on a little bit. We do have a close below here, so you can see we have a close below this support. This is 9:30 again, so it's actually pre-London, so I wouldn't technically be looking for any sort of sells here, but we could see some potential type E wick full sells again, but again, I am not really looking for that just because of the fact that it's pre-London session. So you can see again, there's a potential that they would have worked out just depending on how that played out on the low time frames. We filled the wick and we came down towards this sort of rejection area over here. You can see where price rejected and we ended up coming back up. So I think all in all, actually quite a good thing that we didn't end up taking that trade. So now we're moving forward. We will continue price a little bit. Okay, so we actually have a close at the moment below our support, which we had marked out. Some clean range to the left. Now, the only thing I don't like about this candle is it has a very small wick to the bottom. So basically what we would need at this point is for the next candle to wick up and then break the low of this candle, and we can take some sells hoping to test this sort of support level over here because we have our clean range to trade into. So what we'll do at this point is I will place a short position. So we would technically be taking sells at the break of this low. What I'll do is I'll place my stop loss again on the high of the candle which we enter on. So remember, we're always using stop loss based on our entry candles, not often the previous candle. It's generally the entry candle because we shouldn't be re-breaking the low or high of the current candle or our entry candle based on the type of position which we're taking. So what we're going to do is we're going to play this on and see if we can take a sell here. So again, absolutely perfect. We were given about a 11 pip stop loss, and you can see at this point we would have entered break of this candle low. So this is, we're looking for a type B here. We took that because we retested this area, and you can see price continue down to the support. So this is 37 pip win all in all. So it's another really, really good trade, another pretty flawless entry as well. And at this point, again, after such a big win, what I would say is call it a day, take the win and move on to the next day. I mean, you can look for something in the next session, but at this point I would be looking for a trade the following day. I think if you're taking a win pretty much day after day, you're going to be compounding your account, and you're going to really be looking at building that account, building on the profits, and it's just going to make trading a lot more enjoyable and a lot more fun than trying to take trade after trade. So far we've taken 3 trades. We took these sells, these buys, and these sells over here. All 3 have been wins so far. So we will continue on until the next day because we will call it a day here. Okay, so at the moment we're actually having a bit of a consolidation. We're coming up to our London session. You can see here it's around 8:30. So what we could say at this point is we have some solid support form over here, and we have some clean range to trade into the left. And then in terms of a resistance, I mean, if you're going to be an aggressive trader, you could mark this out as resistance and say these are some clean ranges to the left. But what I would actually do is mark out this resistance and say if we get a close above that level, we could potentially fill this wick and then continue further. But in this sort of a consolidation, I wouldn't be trading above this level. So I'm going to actually remove that zone, and I'm going to either look for a resistance form around this area. Maybe we'll get a clean move up, resistance form, and we can come down. Or what I'm going to be looking for is a break below this support and continuation bearish. So let's play price onwards. Still consolidating. At this point, we're coming up to our New York open. We at the moment have a close below the support level which we're looking for, which is fantastic. So at this point, and you can see we also had a liquidity grab from the top side. We rejected the top of this range, the resistance area. We grabbed liquidity with this wick over here, and we've now had a close below our support level. So again, what this is going to show us is a type B. Well, what we're going to be looking for is So what we're going to be looking for here is a type B wick fill entry. Now remember what that is, it's similar to a type B, but instead of entering at the break of the low, we enter once the new candle is wicked up and then flipped and broken its own low, and then continuation bearish. So we're going to enter a short position here, and we are going to have this sort of a position, so where we have the stop loss at the top of the current candle, entry candle. Again, we don't know where that's going to be, so that'll be presented to us, and we're going to hope that we can maybe, let's say, come down. Even 40 pips would be great in this situation, but we could secure it along the way. So what I'll do is I'll play price on. And as you can see, I mean, that is a absolutely massive move. So we would have had a tiny stop loss. We would have had a stop loss of about 3 pips. To be fair though, because it's gold, I just based on experience would have left it a bit high just in case it broke its own high. But in terms of the continuation, we got 40 plus pips out of that. You can see that this was a type B and we closed below support and we had this continuation to the downside. I do feel like there was some sort of news involved in this move here, because for a candle to be this big, there must be some sort of fundamental impact. This is a 200 pip candle, but all in all, fantastic move. So that's the 4th trade we would have taken in about the same amount of days, maybe 4 days. And so far, they've all been wins. Sells here, buys here, sells here, and sells here. So far, so good. I mean, it's been pretty basic entries. We've taken a type C, a couple of type B wick fills. All in all, pretty much just waiting for our setups to play out in front of us. We've been waiting for supports to break or resistance and supports to form, and then taking moves based on that. So what I'll do from here, obviously again guys, taking the win, we'll call it a session and call it a day, and we'll come back the following day and see what we can potentially look for. This actually says it's a Friday, so we would be coming back on the Monday. So let's see, we'll play price on. Okay, we are coming up to London open at the moment. So what we can do is we can start marking out some potential trading zones. You can see here we have some resistance form. If we break above there, there is potential to fill that sort of range to the left, because once again guys, we know how it works by now. It's very easy. Clean candles is what the ranges we like to trade into, but we also like to be aware that we have a trend as well, and you can see after such a strong push like that, the trend is likely bearish, so it's good to trade with the trend. So ideally we'd maybe be looking for some sells. So what we would do is also mark out a selling zone. You can see we've just formed a support. If we look to the left here below the support, we have some clean range to trade into over here. So that's what we're going to be looking for. Buys above this level, sells below this level over here. So what we'll do is we'll play price on. So you can see here, we've just had an absolutely massive rejection from the bottom side. Again, it is pre-London, so at this point I wouldn't be looking for anything, because you just with London it's always a tough ask. Even at this point in time with the rejection wicks have left, I personally wouldn't even be really looking for any sort of type B sells over here, just because we have this rejection wick. We have closed below support though, and we have sort of tapped into this level to potentially continue down. So what you could be looking for here is a candle to wick up, flip, and then you could take it on the flip to continue bearish. So that's going to be our type B wick fill. But just because of these rejection wicks to the left, I'm going to stay away from that. I'm not going to take that, but it's certainly an idea to look into. So you can see here, price is actually sort of playing out quite nicely. Even a break of this low, you could see continuation to the downside, but let's play it on. And that's exactly what you get. We didn't take anything just based on the fact that there wasn't enough trading range, and that's fine. You know, sometimes you're going to miss moves, can't take them all, can't take wins as well only. So at the moment, it's completely fine. What we're going to do at this point is play price onwards and see if we can potentially find maybe a counter trend buy trade or a pullback and then retest of the low again. So let's just play price on a little bit. So at the moment, you can see we are coming up to New York open. We have had a double close above this resistance again. So what we could even potentially look at here is a counter trend type C, because I'm sure that this has closed on support. It has. You can see that price here has closed on support. So we have support on support. So that's always a type C indicator. And what we can do is we can place an entry position over here, so a long position. And maybe we can retest this sort of support level, and then price may come down later, and we'll just use the low of the entry candle as our stop loss. And what we're going to do basically is once it wicks down and flips, we would be looking for some buys. So I'll play price on, and you can see here, so we've been provided our stop loss. So our stop loss is quite a small one. In this case, because it's so small, I'd actually just use the previous 30-minute candle. So you can see entry taken, price at this point has moved around 17 pips. Wouldn't do anything just yet with the stop loss. In fact, what I would do though is trail it to the current candle low, and we can still potentially see price continue here. So let's see where price is going to go. Okay, so at the moment, price has moved 38 pips. 38 pips, and it is counter trend. So at this point, certainly would be securing some potential custom positions as price goes up. So just secure some of your profits and put your stop loss at break even, because we are up in profits. So you could be looking to secure at maybe 20 pips and then some more positions as price continues. So we have secured some profits, but obviously because it's counter trend, we don't know if price is going to continue the bullish momentum. This could just be, at the end of the day, a low created, a pullback to form some resistance, and then we're going to end up coming back down to retest this low, and the better positions are going to be some sells below here. So we could even potentially be looking for some continuation sells, but to get a position before that, because of this double type, well, it's a type B mixed with a type D, oh sorry, a type B mixed with a type C, I think that this would have been a great position to take. You can see would have come out on top of that as well, and as you can see, price is starting to break the lows again. So that momentum is running out, so you can actually just close the full position. What you would have had left, I'm sure there would have been profit secured in that situation. Now at the moment, you can see we're looking at even a better setup than we just had. So we could be looking at two very quick consecutive trades. We have price forming resistance on previous support, and we are with the trend. So once again, guys, remember, low created, pullback, resistance formed. Now we're looking for price to retest this low. We want to take an entry at the break of this 30-minute candle low. Now the reason for this is similar to what I spoke about earlier. It is the candle structure. So candle structure is when you have a candle which is in either bullish candle structure or bearish. Bullish candle structure is when you're respecting previous 30-minute candle lows and highs. Sorry, when you're breaking previous 30-minute candle highs and respecting previous 30-minute candle lows. You can see we've done exactly that here. Here's the low, here's the high. We've respected the low and we've broken the high. And bearish candles structure is when we are respecting the previous 30-minute candle high. That's exactly what we've done over here. And we've broken the previous 30-minute candle low. So we're in bearish candle structure. We've created a low which we're now looking to retest. So what I would do in this situation, quite simply, is put a sell position at the break of this 30-minute candle, and our stop loss is going to be on our entry candle low. So can't express how important that is. And we're just going to be looking for simple entries at the break of this 30-minute candle low for price to continue to potentially retest this low over here, or at least get close to retesting it. Once again, we can secure some positions along the way and manipulate our stop loss so that it can come to break even if we move into enough profit, so that we have no risk on the table. So let's move price forward. So there's our entry, and our stop loss again would have been quite a small stop loss, only a 6 pip stop loss, and price at the moment has moved, let's see, 21 pips. So it's been a great start to this trade. At this point, you can move your stop loss to entry, and you can just let price play on. And as you can see, low retested, and we have created a new low, and we would have hit our TP and been out of the trade. This is probably your most sort of trustworthy trade, where you have a low created, a retest of a previous support area, and then this low gets retested, and then you can see a continuation if you have enough volume and price to continue. So that's another successful trade in a successive session, and actually two, to be honest. So we took the buys beforehand and we took the sells afterwards. So I mean, this would have been a fantastic session, and at this point you can call it the day, because we pretty much caught everything that was available in this sort of price section over here, which is fantastic. So we'll just remove the drawings and we can come back for the next session. Okay, so this is Asian session. Let's just move price on a little bit more. And still pre-London. And now we are moving into, well, still pre-London. Let's just start marking out some zones. You can see we have clear support over here. And again, guys, reason for this support area over there, clean candles to the left. Resistance wise at the moment, we don't really have any clean candles to trade into. Potentially, if we break this resistance level, you can see we have clean candles to the left over there. So it really is a nice sort of area to be trading into, those two areas. Alternatively, we're going to get a clean move in this area, and that's going to allow for continuation in one or other of the directions if we get the candle setups. Remember, guys, it's just so important to have the correct candle setups to be looking at taking any trades. So let's play price on a little bit. Now we're still, again, moving into pre-London over here. So now this is our pre-London candle. You can see we've actually closed below support and we have some range to trade into the left here. Let's just see how much range we have to trade into. I think if it's 20 or more pips, we can look at something here. 25 pips to the bottom of this range. What we could even potentially look at here, because of this candle, so this candle over here is it's what they call a trap candle. So it traps buyers and then it stops them out, and then there's a little bit of a liquidity grab as well. And now we've closed below support, so we would have had potentially a support level marked in over here. You can see we've got a close below that, and we do have this clean range. Sorry, let me just mark this in. We do have this clean range to the left. So there's good potential that we could see that clean range sort of replicated by moving down with the volume time that we have coming up, which is the London volume time. So once again, we're going to mark in our sell position, stop loss on the entry of the current candle. And remember, this is just going to be a standard type B. The reason it's not going to be a wick fill is because this wick is tiny. It's only 2 pips, not even 2 pips. So we're not losing out on too many pips by waiting for the candle low to break. So remember, guys, we're just going to use the high of this candle as our stop loss, and our TP is going to be at the bottom of the range here. Let's just move it to around the support level. So it's about a 23 pip take profit. So let's play price on, and perfect. So we've been given our stop loss, which is about 6 pips. We've moved about 10 pips into profit. And this is our London open candle, and prices closed again below support. So we've had a double candle close below support, and what we could even see on the next candle is this wick filled and then a retest of this support. So I'll play price on, and that's exactly what we've just got. So that's another successful trade, another successful type B. This is just a standard type B, and you can see we've hit our take profit of 23 pips. We had quite a small stop loss, so a really good risk to reward. And at that point, once again, guys, you can either call it a day there and then, or you can move into the next session. I think it's best we just call it a day and move on to the following day. So I'll just play price onwards a little bit. So you can see we actually had quite a strong move up, but not really any range to trade into here. It's pretty much impulse entries and trading onto resistance areas. So nothing that we're too interested in. So continue with price here. We are now on the next day officially, and we are consolidating quite a lot. So let's see, we are at pre-London now, and it looks like price is playing out with a bit of a type B here, but this is too early to be looking for trades. There's a good chance we'll see some form of rejections, because this is often what it does, is it entices people in when there's no volume and then stops them out, and then the move will happen during a volume time. So there you go. Any sellers would have been stopped out, and now we're moving up to the top of the range. So at this point, we can start marking out some resistance and support. So resistance level, and let's look at our support down here. Again, guys, that is just because we have the clean range to the left, and we have actually a resistance level up here. So we could even mark that out, because if we break above that resistance level, then you can see we have some clean range to the left. So let's play price on a little bit and see what's going to happen. So this is our pre-London candle. You can see we formed some resistance at the top of the support over here. So what I'm thinking at this point, let's just see what this looks like on the 15-minute candle. So it could even be a potential wick fill on the 15 to continue down to the bottom. But let's just see. So we have two scenarios here. We could either take a wick fill sell if price wicks up and then breaks the low and continues bearish and down to the bottom of this support area, or we could take it at this level over here if we break this previous 30-minute candle low. What I would say is, because it's a 15-minute wick fill as well, I would potentially even be looking for a wick fill entry. So what I'm going to do is I'm going to place a short position on the flip of this candle. Our stop loss once again is going to be on our entry candle, and our TP is going to be at the bottom of this range here, which is going to be around, let's just say, to be safe, 25 pips. And it's banking a little bit on the volume time. So remember guys, trading our volume times is so important. So let's move price on and see what can happen. This is going to be a type C again, because we have resistance on resistance and clean candles to left. And we have our time of volume, which is London open time, coming up right now. So let's see what happens. And as you can see, TP hit. Our stop loss would have been quite a small one. It would have been about 2 pips by the looks of it. So at that point, because it's too small, I would have put it probably a little bit higher just to be safe in case it wicks up a little bit and then continues to drive down. But as you can see, our TP would have been hit over here. We had the clean range to the left, and you can see price moved down really nicely, filled this range, and we would have hit our TP, and that would have again just been another great trade on the roll. So at the moment, I mean, we're certainly taking the right trades and the right entry types, type C's and type B's, and what we'll do is we'll just call it a day there and move on to the next session on the next day. No real proper entries again. This would affect a few people out over here, because once again, there was a little bit of problems to the left over here. Although it's clean range, there's these levels of resistance, so it wasn't the cleanest. And also these wicks on lower time frames are going to be support areas. So at the moment, we're respecting this resistance and support. So we broke out, we faked out, and we came back straight back into this area. So let's play price on again. We're now coming up to pre-London, as you can see over here, and we had a nice clean move down, but we're still in the range. So at the moment, it's going to be probably waiting for price to close below or above the range. You can see here, this is our pre-London candle. Absolutely no trade possible to take here. There's no close above or below resistance or support, and there's no trading range really, unless we were to get a close above here and take potential buys, or to take sells below here. But at the moment, nothing happening, so it's going to be best to wait for New York session to open up, or even pre-New York we could get some volume. Let's see here. So at the moment, you can see price, we've just had an absolutely massive push up, and again, this would have been in between sessions, so quite tough to take these sorts of moves. Trusting the volume in between sessions is always tough, but you can see at least clean moves, what they do is they produce more clean moves. So by getting these clean moves, which some traders think we've missed the move, what we should be thinking is, okay, that's just provided us with opportunity to take a move moving forward, because it's provided us with some range to trade into. So it's pretty much exactly what I wanted to see here as a resistance form. And I think that because we've had resistance on this support here, and it's also where these rejection wicks are, if we take a sell at the break of this 30-minute candle low, if we get a wick up, we can actually potentially see a continuation to the downside. We're respecting this range. At the moment, this is called trading a range, where you can pretty much take positions within the range because we're respecting resistances and respecting support. And at the moment, we got some clean candles to trade into. So what I'll do is I will take an entry at the break of this candle low here. Stop loss is going to be our entry candle high. This is actually going to be a mixture of a type C and a type D. And the reason for that, I'm sure you guys can answer, is support over here. So it's resistance on support, and also resistance on resistance. These resistance wicks over here. So let's play price on and see. Perfect. So we would have had about a 10 pip stop loss, and our TP was about 50 pips in this case. So massive TP, great risk to reward ratio, and we cleared the whole range in one candle. So that would have been another successful trade on the roll, and at that point, once again guys, such a massive win, no point in trying to risk any profits or trying to do anything stupid or fancy moving forward. So you just there and then you can call it a day and move on to the next session. So let's move price on. You can see we moved down quite substantially after that move. So that was obviously the catalyst, which was it's always nice getting early into being part of the catalyst candle as opposed to after the catalyst candle. Sometimes you get lucky like that and manage to be a part of that. So now we're moving into the next day, moving towards pre-London at the moment. And now we are at pre-London. So what I would say at the moment is we have resistance level over here and support down here. And this is again one of the clear reasons of why we mark resistance and support the way we do. If we look below this support, clean range. If we look above this resistance, clean range. So again guys, just nice and simple. That's why support and resistance and clean candles are very important to our trading strategy, or my trading strategy, just because you want to be trading into the right zones, and knowing that before you even think about taking a trade and knowing where to take a trade, those are obviously the core fundamentals and the core technicals towards this trading strategy. So let's play price on. And at the moment, once again, we're just consolidating. No potential entry types here. So here we've got to close below this support level, but you can see we are in a bit of a range. I'm just looking here. We didn't mark this out previously as a support area, but if we had, we would have had a potential range left over here. But in my opinion, I wouldn't be taking this, just because although it's a double type B, you can see close below, the range which we have is very small. So it's 13 pips to the body of that support, although it's 30 pips to the wick of that support. So what I would do is I would just paper trade this. So in that, what I mean by that is I would just visually say, okay, I'm going to enter here. So this isn't a sort of trade where I would really be looking at taking a trade. The range is too small, but let's just put this to the test. You know, we may as well test some trade ideas and see what happens. So again, this is going to be a double type B entry, which is when we get two candles closed below support. We have some clean range left. It's not enough for me personally to have taken this trade, but let's just look at what could potentially happen here. I think in terms of technicals, it makes sense because we're not respecting these support levels, so there could certainly be a continuation, but let's just be clear that this trade wouldn't generally be taken. I think that the range is too small, so let's just see for experimental sake how this goes. And you can see we've actually moved down quite nicely. The stop loss would have been quite small, about 7 pips, maybe 8 with some spread, and we would have moved about 20 pips at this point. So could even move your stop loss to entry and let this play out risk-free. And as you can see, price continued bearish. But once again, guys, just to clarify, I wouldn't really be taking a trade like that. I think it's quite risky to trade into such a tight range. I prefer to see big ranges like this. What you could even look for here is a potential wick fill, but what I don't like to often look for is where prices move down so much and then looking for an entry after prices move so much. It's sort of like chasing a trade and grabbing the last bits of a move. Instead, you want to be part of the main bits of a move. So I think we'll call it there, just because I think that this is going to be quite a long video and it's a lot to take in. But pretty much every entry we took, in fact, I think every entry we took here was a win, and it was days after days. And what it shows is that all you really need to do is take on one session, sometimes two. So what I would recommend is London and New York. And then what I would also do is make sure that you are trading the right sort of candles as well. So you want to be trading within London and New York the right candles, which I always recommend are the market open candles. So for London, that's your London market open. For New York, that's your New York and New York Stock Exchange market open. And then in between those, you pretty much want to stay away from intra-session trading, because volume then is always a bit messed up. And then from there, I think if you take a win, again, this is more psychological, and just when it comes to knowing when to get out of the markets, it's once you take a win, call it a day and come back to the charts the next day. Every day you're taking money from the markets, it's a successful day. you're in the top 10% of traders. In fact, I think it's even less than that, probably top 5% of traders. So rather stick there and be happy with that, and every day just compound those wins. And even if you were to take a loss, I think maybe give it one more trade that day, and then if that's a loss, just completely call it a day and make sure those losses, well, hope that those losses are managed. I think the risk management video goes into some pretty good detail in terms of using the 5-minute candles to manage your trades if those start going against you. So all in all, guys, yeah, I know this is a very long video, but I hope that those entry types and the zone marking out, as well as the times to trade, you found very beneficial, and I hope that you guys can implement this as well into your trading strategy moving forward. So thanks, and I'll catch you on the next one.